Advisors were not investment experts. And yet I knew from my experience in the industry that advisors were actually not necessarily the best people to help me with that. And the mission of Mezzi is to help people with holistic wealth guidance. If you were an expert stock picker, then you would probably be running your own hedge fund. And even then, as we know, most hedge funds underperform the market. There's nowhere to find holistic wealth advice. The largest challenge for us is data consistency. I think AI is going to allow their business model to change because it's going to dramatically reduce costs. We are a replacement for those that want it to be a replacement, and we are a complement for those that want it to be a complement.
Hi, everybody, and welcome to another episode of the Curiosity Code podcast. We extend our warm welcome today to Manish Jain, an innovator at the intersection of finance and technology. As the co-founder and CEO of Mezzi, Manish is transforming the way individuals and families manage their wealth using AI. With extensive experience on Wall Street and as a venture investor, Manish combines financial expertise with a passion for empowering smarter financial decisions. Manish, it's a pleasure to have you with us. Could you begin with sharing about Mezzi and the mission that drives your platform?
Yeah, Alex, thanks so much for having me. Appreciate it. Yeah, sure. Let's jump into why we're building Mezzi. Let me give you a little bit of background on myself. I've been around personal finance and finance, my entire life. I don't know how many people can say that or would want to claim to be able to say that, but my first memories of kind of finance were going to the office with my mother, who's a financial advisor, and accompanying her and helping her with her paperwork in exchange for vending machine candy bars. And so I've kind of been around, conversations around retirement and stocks and things like that from a very early age. And actually, as I kind of wanted to get more experience in the space, I started really, taking an interest in studying and then saying, okay, well, I want to go and learn from, the best on Wall Street. And so my first job was at a regional office of a major wealth management firm. And what I saw there was, I thought I was going to learn all about investing and putting money to work. And what I quickly saw there was that you would see mutual fund salespeople come in and pitch a variety of different mutual funds to advisors who would then go and sell those funds to their clients or just put their clients in those funds. And often these were pretty expensive funds, charging a large percentage of your assets. And what I started to realize was that advisors were not, at least in this case, advisors were not investment experts. And so I said, well, I want to go and learn from the best investment experts. And so that took me to Wall Street, where I was at JP Morgan and I was an equity research analyst. And I was actually researching stocks for a living and coming up with recommendations on it. But as I was doing that, as a 21, 22-year-old, I was also setting up my own brokerage account, my own retirement account, eventually my own Roth IRA and my own traditional IRA. And then I married my wife and her accounts joined the mix. And a few years ago, we had a son and we opened up a 529 account for him and a custodial account for him. And nowhere through that journey of opening up these different investment accounts was I getting guidance on how to best implement them, how to conduct the right asset allocation across the board for them. And yet I knew from my experience in the industry that advisors were actually not necessarily the best people to help me with that. And even if I did turn to them, it would be a very expensive value proposition. I'd be giving up 1% of my assets every year, which can amount to millions of dollars of lost wealth over a 30-year time period. And so what we saw was that for those people out there that don't want to put all of their assets with an advisor or don't want to put any of their assets with an advisor, they don't really have a great alternative. There's nowhere to find holistic wealth advice. And so therein lies the kind of the birth of Mezzi, and the mission of Mezzi is to help people with holistic wealth guidance so that they can make better decisions across the board, across their assets, and ultimately grow their wealth over time for, fulfilling their dreams, whether it's retiring early, traveling more luxuriously, setting up their kids for their education, etc.
That's very nice, neat product. Because I came across the same challenge personally when I started, like you, at certain stages of your life, you started to look into investments and like you're so confused.
Yeah.
And you had the background working at Wall Street. I, and as many other people, did not. So it's just
Well,
frustrating.
the interesting thing is, and I know you work a lot with financial services, is that I don't think people realize um, how narrow different aspects of the financial field are, right? And so just because you are an equity research analyst doesn't mean that you are actually an expert stock picker. And it doesn't mean that you were an expert stock picker across the entire, landscape of stocks.
Exactly.
If you were an
Yes.
expert stock picker, then you would probably be running your own hedge fund. And even then, as we know, most hedge funds underperform the market. And just because you are a financial advisor, by no means does that mean that you are an investment expert. Everyone in the finance world has very, different areas of expertise, and they end up being fairly narrow. But I think, if you were to go to a dinner table, if you go to a dinner conversation, a dinner gathering with friends, and they ask you, because they learn that you work on Wall Street, they ask you, what's your stock pick, or what do you think about the market? Because they think that you're an expert about
Right.
finance, and that's really far from the truth.
Yeah. Financial services industry is so vast. That's straight to the point. Let's get back to Mezzi. So Mezzi is heavily powered by AI, right? Um, as far as I understand Mezzi, it uses AI to provide investment insights that, as you said, typically you would get from high cost advisors. Let's lift the curtain a bit. Can you share what are the specific like models or algorithms you use to deliver precise, personalized insights? How do these tools handle complex investment scenarios like multi-asset portfolios or tax optimization? I know we chatted before the recording started that you are not, the technical founder of Mezzi. So, and I totally appreciate that we can cover the conversation just a high level without going into too nitty gritty technical aspects of this, but still let's.
Yeah, for sure. Let's jump in. So, it really starts where I would say I am technical and have had a lot of experience is around the financial data side of things.
Mm-hmm.
And it so happens that we all know that with that for AI to really operate well, you need really good data. And so let me kind of walk
Yeah.
you through the journey of a Mezzi member or Mezzi user, and how the data piece of the equation becomes so important for delivering AI driven insights. And so, I kind of shared my personal story about opening these different investment accounts and
Yeah.
starting to figure out asset allocation along the way. And so, our whole value proposition with Mezzi is don't open yet another investment account. You probably already have a Robinhood account for trading, a Coinbase account. Maybe you're doing alternative investing on a different platform. There's so many different places, so many different fintech products out there. Bring your existing fintech products or your existing brokerage products, your existing retirement accounts, bring them to us, plug them in. We can talk about how we plug them in. It's, via the aggregators that many of us know, Plaid, Finicity, etc.
Mm-hmm.
And then we pull in that data. And from there, we have to immediately start normalizing that data and cleansing it and making it appropriate for delivering accurate insights. And so what that, I'll give you a couple of examples to bring that to life. From a certain brokerage, you might actually own the stock Meta, right? Facebook Meta. And that brokerage or one of these aggregators may have mislabeled the stock as an exchange traded fund as opposed to a stock or an equity. Now, how can we properly provide you with an asset allocation unless we correct that classification? That's a small one. I'll give you another one. The stock Tesla over the past 5 years has done something like 3 different stock splits. If you were to look at your transaction history in a brokerage, it does not adjust for those stock splits. So if we want to provide you with accurate tax insights, we need to adjust for those stock splits. If we want to provide you with accurate performance data, meaning time-weighted performance over a period of time, we need to adjust for those stock splits. And so this is the level of depth that we're going in terms of cleansing the data, cleaning up the data, so that we can then go and deliver you accurate insights. So now that you can flexibly come and use our AI, or we can proactively deliver you an insight for something like, by the way, did you realize that your retirement account managed by an advisor is underperforming the S&P 500 over the past 2 years, or underperforming the NASDAQ over the past 2 years? Did you know that? Or alternatively, you could come to our AI Copilot and say, well, how has my portfolio performed against 5 different model portfolios, including a 60/40 portfolio, and be able to get these kind of flexible insights. And so it's kind of marrying this really cleaned up data with obviously the flexibility and capabilities of AI. And I'd say, full disclosure, we are early in our journey in terms of delivering these insights. And as we talked before the recording started, the world is moving so fast right now. And so we're all learning on a day-to-day basis.
Exactly. Is there like your proprietary AI LLM model that you guys using, or you tapping into existing LLMs?
Yeah, we're tapping into existing LLMs, primarily OpenAI today. And but what's proprietary is the way that we're building a library of tools in order to be able to deliver accurate guidance. So what do I mean by that? If you were to, copy and paste all of your investment data into a chat GPT, it will hallucinate. It will provide you with inaccurate data. We all know about shortcomings related to the shortcomings of math that ChatGPT has. And so we take a lot of effort to correct for those shortcomings. And we know AI is going to get more and more powerful, but we are taking what's proprietary is that we are enabling us to deliver a variety of different accurate insights, and the accuracy is really important to us.
Right. I think I see more and more of that approach in new ventures and new startups, because it's really simply expensive to catch up with big guys and develop your own LLM. It's way more efficient to use existing models and just work out the layer above it in a way that you can have clean data, how to work with prompts and avoid hallucinations and all that management piece that, as you said, like you wouldn't simply get by talking to a chat GPT OpenAI model.
Right. That's right.
Speaking about AI adoption, as I said, like many fintech companies, they follow this route, but at the same time, I've seen it, firsthand, and I've seen it in other companies. Many companies struggle to integrate AI seamlessly into their platforms. What challenges did you guys encounter in developing Mezzi's AI capabilities, and how did you ensure transparency and user trust in your algorithms?
Yeah, it comes back to the data side of things. At the end of the day, that has been the largest challenge for us, is data consistency. And, I would say we've kind of gotten 80% of the way there, but there's still, it's still a never ending process to continue to get the data right. And so, we will occasionally have shortcomings with certain users that have esoteric investments, or, have a certain asset allocation that we are unable to handle today, or just because it hasn't hit our roadmap yet. And so I would say the data challenges are still kind of the largest kind of roadblock challenge for us. Now, in terms of, how do we convey this to users? Well, one is we're just constantly engaged with our users. We're with our
Mhm.
members. We're constantly talking to them and working through their specific challenges. But when it comes to using our AI, we're very transparent about the risks in using AI, the inaccuracies that could happen when it comes to using AI. But also, balancing that with the power that they will get in being able to essentially have a conversation with their portfolio in a way that they've never been able to do before. And so we're very forthright in terms of these disclosures.
Makes sense. Makes sense. Um, we started this conversation with kind of the current state of industry and how it's sometimes confusing to get the right advice, and how traditional wealth advisors, domain is structured. How does Mezzi differentiates itself from the traditional, wealth advising kind of setup, community industry, whatever we call it? And maybe, I don't know, you have plans actually partnering with the existing advisors, and what role they may play long term in your strategy?
Yeah, I appreciate that question. I think it's important to maybe let me give you a backdrop of how I view the world. And so when you think about the landscape of people that are accumulating wealth, and that are a customer of the wealth management industry in some way or another. And what do I mean by that? Customer of a wealth management industry could be someone that has a single account with the Robinhood and they actively trade in there, or it could be someone that has put all of their assets with a traditional wealth manager and never thinks about their investments and is completely passive and outsourced about it and doesn't want to think about money at all, just wants the advisor to think about it for them. So that's
Mm-hmm.
like the kind of polar opposites end of the spectrum, right? You can think of day trader and you can think of someone that's completely outsourced.
Yeah.
There's a whole category of people like for us, we're not today we are not focused on the people that want to be completely outsourced, that don't want to think about their money. But it turns out that about 2/3 of the market likes to be hands-on in some capacity. And why do they like to be hands-on? They like to be hands-on either because they don't kind of trust the establishment with their money, or they don't feel like the establishment has given them the returns that they want, or it's just as simple as it's their money and they want to control what happens with their money. But then there's also a category of people that are hybrid. They'll say, I'll take 50% of my assets. And we see this with, multimillionaires that are using Mezzi to manage their wealth, where they will put a pocket of money with an advisor, and then they will self-manage a pocket of money. Um, and so the benefit of where Mezzi comes in that particular situation is that now you can see your asset allocation for what you're managing on your own alongside your advisor account that you've plugged into Mezzi, and that you can make sure that you are managing your assets on a complementary basis. What that means is, let's say your advisor bought a tech fund for you and you also have a tech fund, and it turns out that, collectively, you now have 50% exposure to tech. Well, you may not have intended to have 50% exposure to tech, but it's now good that you can see what your advisors put your money into versus what you have, and you can balance that out. And with Mezzi, you can go a level deeper and say, well, what is actually in those tech holdings, et cetera. And so that's how we view the broad landscape, and who are the types of people that we are serving. That lends itself to naturally helping people that are hands-on, but ultimately also we're already getting this request from our users is, for example, one of our users wants to be able to take his conversations with our AI co-pilot and bring them to his advisor and say,
Mm.
okay, well, these are the things that I learned. What do you think about these? And so, what we're really doing is we're empowering people to get more educated about their wealth, to have better conversations, to be more in control with their money, whether that's with an existing advisory relationship or that's simply because they're using Mezzi to learn more and to get more up to speed. Does that make sense? I'm not quite sure I answered all of your
No, no,
questions.
no. It totally does. It actually also sparks some thinking in my mind. So it seems like eventually you'll have lots of data on existing wealth advisors and you can actually, I don't know, start some sort of recommendation charts, whoever is performing better. Um,
Well, I mean, I'll push back against that a little bit. So, I talked about how the finance industry is very nuanced, and turns out that even the label of what is a financial advisor is very nuanced. And so, there's
oh
so many
yeah.
different categories of advisors, from those that only focus on investments to those
Mhm.
that actually don't want to focus on investments and just want to focus on things outside of investments and the broader holistic picture. And so, one of the areas that we're saying is, well, you can self manage your investments on your own. And then eventually we can help you with all of the other holistic stuff beyond investments. Or we can introduce you to an advisor that can help you with that, even if you have a 30-minute question or an hour-long question, or you just don't want to completely rely on an AI to help with your guidance, but you actually want to have a human connection. I mean, I think it's probably underappreciated why so many people actually use an advisor is for that human connection. There's a
Mhm.
certain kind of psychological aspect to just working with a human. That's for some people, uh, but it's not for everyone. And I think increasingly we're seeing people are more and more comfortable talking to an AI just as much as they are comfortable talking to a human.
Yeah. So Maisie is not the replacement of advisor. It's more like a co-pilot in a sense.
We are a replacement for those that want it to be a replacement, and we are a complement for those that want it to be a complement. I'm not here to say that we need to go in, we need to replace advisors. Like I said, for some people, having that human connection is the right thing for them, and
Yeah.
for others, it's not. And so I think we have an opportunity to serve people in both respects.
Love it. It's a nice place to be. Love it. Um, let's talk about AI and broader sense. So major players in the industry, like Citigroup, for example, using AI for their internal efficiencies, and it's an ongoing trend. Like everybody's trying to catch up and implement AI in one way or another at enterprise level. Um, and retail platforms are focusing on personalized client services. You have like pretty much background in both sides, institutional finance and startups. Where do you see the biggest potential for AI to impact wealth management for institutions versus individual investors?
Yeah, I mean, I would say it's a really interesting challenge for institutions right now. They're obviously getting a ton of efficiency and will be getting more and more efficiency when it comes to internal processes. And so, whether it comes to, automating email interactions with customers, to gathering financial insights like you might get from Mezzi, but they're doing it internally, where they can, quickly look at data for a given customer and then take that data and email it or hop on a phone call or a Zoom call with a client and discuss it. And so, I mean, I think there's so much going on. What I'm really interested to see is what is the business model disruption that happens to the traditional financial world. We can take the wealth management world that has been generating, their revenue from 1% of assets a year, and that's the primary revenue stream that they've been getting. Um, and the justification is, let me take 1% of assets, uh, even though most of the value that I'm going to provide is outside of investment management, I'm going to charge you based on your investment assets. And so they're going to have a challenge in justifying their value to their end clients
Mm-hmm.
increasingly as AI becomes more and more powerful. And so I think the business model is going to have to change. Like, I think AI is going to allow their business model to change because it's going to dramatically reduce costs, but the business model will have to change. And you see it across the board over the past 3 decades. Fees in the financial services space just continue to drop, whether it's trading commissions and Robinhood bringing trading commissions to zero, or whether it's mutual fund fees going from 4% to 10 basis points. Today, direct indexing is a huge value proposition that advisors pitch, and they charge 60 basis points for it. But you've got players out there that are now, fintechs that are now charging 10 basis points for direct indexing. And so it's a matter of time that fees continue to come down, including on the wealth management side of things.
Yeah, that's an interesting future that's probably going to happen and evolve over the next maybe year, with the pace that we see technology evolving, and things are changing, and enterprises are investing heavily and implementing AI. And yeah, I see that happening probably even this year.
Yeah.
Manish, your background includes, as you said, like Wall Street experience, and you managed quite a portfolio there. I have here notes that it was 300 billion securities
Yeah, I mean, to be clear,
portfolio.
I didn't manage that portfolio. I worked on a large team managing that portfolio, a team of 500 people. But
Oh, okay.
I got to learn a lot in that experience, working directly with the firm's chief investment officer, and then a strategy team there that was putting together the strategy of managing this multi-asset
Right.
portfolio. So, I mean, that's actually where I learned a lot about, just the complexity of data when it comes to managing such a portfolio. Because if you think about it, how is a team consisting of, economists and PhDs collecting all of the data that they need to build the models that they need in order to be able to manage this $300 billion portfolio in the face of, recessions,
Hmm.
European debt crises, regulatory changes, etc. And by the way, like, this every bank out there has this kind of portfolio. It's portfolio that's used for asset liability management. And so it's a complex activity that happens across kind of every major bank. JP Morgan happens to have the largest such portfolio, at least as of when I was there.
Sure. So, what lessons from that experience have influenced Mezzi's approach to wealth management technology, if any?
Yeah, I mean, I think it's, the appreciation for uh, the quality of data, making sure you don't have garbage in, garbage out,
Hmm.
and how that data should be delivered so that it's comprehensible to a broad audience. And so, you know, I, I'll give you an example that hopefully resonates. You may be looking at, municipal bond data, and you need to convey insights from municipal bond data to, and I'm not talking about Mezzi today. I'm talking about, JP Morgan or just Wall Street in general. You may need to take that municipal bond data and be able to present it to an audience that is not a municipal bond expert. And so, what data do you want to take out of that? And how do you want to deliver it? And where are you going to get that data so that it's accurate? And these are just like kind of ingrained in me as the appreciation for thinking through these types of things and figuring out where to get that data and making sure that it's reliable. So that, today, one of the core value propositions that we offer is, in addition to all the data cleansing that I talked about, is we then take your personal, for Mezzi, we take your personal brokerage data, retirement data, et cetera, and we marry it with live financial markets data. And that is how we are able to deliver you with a lot of accurate insights that you really can't get in many places today, if anywhere else.
We talked already about how AI is changing the landscape of financial services in general. Let's focus on wealth management. So we see that lots of things happening, like Robo-Advisors, personalized financial insights. They're becoming more and more norm for people. AI Copilot, Mezzi. What do you believe will define success for wealth managers in this new era, and how should professionals prepare for this transformation?
Yeah, I mean, I guess the only piece of advice that I could give to professionals is just to make sure that you're hands-on and that you're learning on a day-to-day basis, because every day things are changing, and so your customers, your clients are just as exposed to these products and these tools at their own workplaces as you are. And so if they're learning at a faster clip than you are, then that could create some problems. And so, I mean, I guess that's probably the biggest piece of advice I get. The other is I think really kind of figuring out what are the different unique places of value that you can add, knowing that the consumer is increasingly empowered by technology, and that the game of relationships is changing. I think one of the things that's really interesting for us, and that we're in kind of early conversations with folks around, is that the power of AI allows a given professional to actually serve more people. Mm-hmm. So a traditional financial advisor may have 50 or 100 clients that they're serving, or on a fairly automated base, on a fairly manual basis, right? They get an inbound email from a client, they have to type up that email. They need to pull up some data for a client, they got to go and hunt and peck for that data. But increasingly, and the most technology kind of savvy firms out there are aiming to help financial advisors support not just 50 or 100 clients, but actually 200 clients or 500 clients with technology. And I think there's an interesting opportunity for Mezzi to help those types of firms so that they can see more clients at hopefully a lower cost. Lower cost for both them to serve those clients and for the clients themselves.
Manish, I'd like to wrap it up with more broad discussion about Mezzi and the way it partners and collaborate with its investors, because Mezzi attracted investors like from major tech companies like TikTok, Amazon. How did you approach building these partnerships, and what role do they play in Mezzi's growth strategy?
Yeah, I would say, like, if you are thinking about starting a company, and Mezzi is my first company, and so raising capital is never an easy journey, unless you've done it many times before. But certainly your first time around, there's a lot of learning that needs to happen in that journey. And I'd probably actually reference, I believe her name is Elizabeth Yin, but from Hustle Fund. One of the pieces of advice that she's put out there is just talk about your company to anyone that's willing to listen. And I think if you really take that advice at heart, it will open up doors to a variety of conversations. And then once you start having those conversations, even if they don't lead to anything immediately, continue to engage with those people and build relationships with those people, because it could pay off a year later or 2 years later. And I'd say that's a common theme in our fundraising journey is, whether it's the smallest check or the largest check, it was a relationship that was built over several months or if not years.
Yeah, I would say it's a common theme, not even in the investment.
In life.
It's just in life and in business in general. If you want to prosper, like keep working on your relationship and investing in there. It's that's how it works from my personal experience as well.
Yeah, yeah. And so, but don't be modest about what you're building, and even if it's not 100% polished, because it'll never be 100% polished, keep on talking about it. Keep on jumping onto podcasts and talking to people about what you're building, and what you're excited about, and ultimately that will lead to lots of different opportunities, whether it's customers or fundraising.
Manish, appreciate it. Thank you for being here and sharing all the wisdom about wealth management and how AI can change the industry. That was great. Thank you very much.
Thanks for the time, Alex. I really appreciate it. I enjoyed the conversation.
All right. And for the listeners, don't forget to subscribe if you're not yet, and hit the like button, and see you in the next episode.
All right. Bye.